Hey everyone, it's Evan here from the Trade Risk on Friday, January 5th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. Today we're going to talk about bulls kicking off 2018 with authority, finishing up almost 2% across all the major averages or more. We have the S&P 500, the Dow, and the Nasdaq all finishing above their standard 2 and 20 Bollinger Band, so that gives us that near-term sort of overbought look that we want to be a little bit selective when we're putting on that new exposure. And we also have earnings season, which is fast approaching. It's going to be kicking off in basically a week or two's time, so we're going to get ready for that. We're going to talk about all this and some more right now. All right, we'll jump in here with the S&P 500, the SPY ETF. You can see we finished up almost 2 points here on Friday. That's good for 67 basis points to the upside. And when we take a look at the action this week, it's basically been nothing but higher from really out of the gates on Tuesday when we started making or made a new closing high and then just continued higher Wednesday, Thursday, and Friday. So if we go to that weekly chart here, you can see 6.5 points to the upside, 2.5% of ground covered, new all-time closing highs. And take a look at the MACD here at the bottom of my screen. You can see that's making new highs as well. So when you have momentum kind of confirming that what we see from price action, so we got new highs in price action, new highs in momentum, that is a sign of strength in this trend, which is getting very long in the tooth, but still not showing any signs here of slowing down. Maybe we're getting into sort of the parabolic run-up that gets us the inevitable pullback because we have gone such a long time without any meaningful correction through price, but we are getting those little mini consolidations through time. Take a look here at this weekly chart. You see exactly that. It's really not much, but the last 4 weeks of 2017, just take a look at the ranges that compressed, and we really kind of came to that grinding halt. We just went sideways, a slight upward bias here, but we basically covered no ground for the past month or so, and that set us up for that nice range expansion, which was one of our ideas from last week's video, that coming into 2018, we would see some range expansion. We couldn't know for certain which direction it would come in, but of course now in hindsight we see it's to the upside. That makes sense where we have the trends that have been in place to the upside with bulls very much in control. So if we go to the daily chart here, again you can see just MACD continuing to new highs here after taking a breather from the last week of trading or so in 2017, and we have new closing highs. We are completely above the upper 2 and 20 standard Bollinger Band, so that may give you, again, not a reason to short, but a reason to maybe be a bit more selective putting on new long exposure, just to understand that we have covered a lot of ground in just a few days time, and we want to just be aware of where the market is before we just pile on to that long side looking for more. So those are basically the comments here. There's not too much else to say. We are up at new highs. We are well above and stretched above some of these moving averages. Can we pull back for a couple of days? Absolutely. But when we have momentum like this on multiple time frames that continue to be trading at new highs, those are probably pullbacks that you want to be positioning in, not necessarily looking to short and get aggressive on the short side on those pullbacks. So that's the S&P 500. The other thing to keep in mind is we do have earnings season, which is fast approaching. So we kind of have this perfect storm of we got the range expansion to the upside. We're racing higher to new highs. Shorts again, if there's any left, they're getting squeezed. They're on the run. Everybody's sideline that doesn't want to pay up for this market continues to be put in a tough position to either underperform or buy into this market and chase it. And then with earnings coming up in the next couple of weeks, we also just have that effect where we could start to just see that nice rally right into earnings, and then maybe it's earnings that gives us a reason to pull back, stumble, or rethink a bit here, consolidate, and just digest some of these early gains. So right now, buyers completely in control here for the S&P 500. I think the Russell 2000 might be the, if you're looking for an excuse, if you're looking for a sell excuse here, or if you're a bear that wants some reason to potentially start a position or get more aggressive on putting on hedges or shorting this market outright, I think it's the Russell that you're going to want to look to, because as you can see here, it hasn't quite convincingly broken to new highs. This is a new closing high here for the Russell, and particularly on the weekly chart. Take a look here. It's a new weekly closing high, and we have based out pretty nicely here. This is not a pattern that I would advise shorting. This looks to me like it could be ready to rotate in for the next leg higher in this market, but in the event that we do fail sharply here, I think that would be interesting. I think if we came in Monday with a complete change of character and we started to take out these lows at 154 and started sinking, I think that would be an interesting signal to maybe put on some hedges or maybe test the water. If that happened, I'd say it's the less likely scenario here. And again, I don't have any skin on the game on that trade whatsoever, and I wouldn't advise it right now, but it's something to pay attention to. I'd be paying attention to see how the Russell acts up here right around this 155 level. We failed in early December, we failed again in mid-December, and now here we are again after putting in a higher low after a lot of consolidation here, and that's what would have me concerned about trying to short this. I would probably be looking for a long signal here through this level for new momentum highs, for that rotational leg higher to help fuel this market. But again, if we don't see that, maybe that's some signal for you to pay attention to. Nasdaq 100 just completely powering higher this week, up 4%, just really remarkable week here. MACD again MACD making new highs here on the weekly chart, and again extending away from all those moving averages, making new closing highs. This is where a lot of the strength was this week, and you actually saw it in the breadth a bit too, just because you did see, the Russell 2000, again, a great week, up 1.5%. It was the lowest actually for the broad averages. And breadth, you could see the AD line specifically was a little hesitant this week. And what that was basically telling us was some of these larger cap tech names and larger cap stocks in general were helping fuel this market higher, while the small caps were a little bit reluctant. So again, it's a slight, maybe minor divergence there to pay attention to with that Russell 2000 for next week into into the middle part and throughout the month of January. So that is the market environment overall. Let's get a look at some of these other markets here. We'll go to TLT next. You can see down 1%, still here in this just very messy sideways range. This is building up a lot of energy for the eventual breakout here, which maybe we get sometime later this year, but really above 129 or back below this 122 level, very wide. That's basically what I'm looking at in here right now. There is just no trend to take advantage of. You could go down to an hourly chart if you want to be real active, and you could kind of look at this as potentially a series of lower lows and lower highs that are going to try to develop here. But for me, I'm just waiting for those bigger ranges to resolve themselves. If we go to commodities next, we got oil here, which finished up 2.5%, continuing that uptrend up and to the right here. Shouldn't be that much of a surprise. We had the uptrend intact. It's continuing higher. MACD again is making itself back up towards those highs. And again, you can see we cooled off a bit here towards the end of the week on Friday, but still well above all the fast moving averages. The bulls are very much in control there. Natural gas had a nice start to begin the year, but then quickly gave it back, already down 5% for this first week of trading. So when we look here structurally at this trend on the weekly chart, this continues to be in its downtrend. When we had, I think, the midweek video on Tuesday, we talked about this V-shaped rally with some volume coming in here, that maybe this is a good bottom, and I still think that can be the case. We're clearly coming back down to retest that thesis. So we did get an uptick in volume. Let's see if this $21 level, we did just have a reverse split today. Let's see if this $21 level will hold for us, and maybe that gives you another shot to sort of buy at the lows and look for that bottom to start to get carved out here. But I'd really, ideally like to see a higher low get put in. Otherwise, pay attention to that $20 and now 50-cent level. If we go to metals next, we got GLD, which just continues to march higher as well, 1.36% to start the week, and that's after covering a lot of ground for the last 3 weeks. Take a look at this move here ever since bottoming out, this V-shaped rally Friday off of the December 12th lows. We've covered a lot of ground. GLD is a bit too bid up for me to just jump in here and pile in, but I like GLD on pullbacks here. So I'm paying attention to it, and maybe it's even the miners, but I'd be paying attention to this space where if we finally do get maybe a consolidation through time or some type of pullback in price, I'd be looking to buy that dip. We'll see if it presents itself. We'll see how it materializes, if it materializes. But that's a trade I'll be paying attention to right now. Not looking to do anything with it, but it's on my watch list. Silver, kind of the same situation, just to me doesn't look as attractive. So for now, I'd be paying attention to GLD, but similar comments apply. Lots of momentum here. Pay attention to maybe a pullback or a dip, and maybe silver is equally good as a candidate to buy on those dips, but I'd be paying attention to gold. And I think that's everything for the major markets. So let's look at some of the sector leaders here. So first, XLB materials just off to the races here this year. Again, you can see MACD making those new highs. Take a look at this, 3.85%. So no joke here in materials. They're getting a nice bid to the upside, just really expanding away here, kind of gapping and running each and every day without really looking back. Lots of strength in XLB, maybe short-term overbought, but it's one of those things where if it starts to pull back, I'd rather be looking at dips as opportunities rather than trying to short this outright. XLV, another healthcare, so another sector of strength here, 3%, and this is getting an actionable breakout. So I like this setup here in XLV. I want to be allocated to it. If you look at the weekly setup here, it's been moving sideways ever since October, topping out around this $84 level. It came all the way down to 81, rose back up to 84 in December. It failed a bit, checked back, and now it's expanding to the upside. Nice range expansion, nice clearing through these highs here, making new highs. So I like XLV. It's a space that I'd want to be paying attention to and involved in. Semiconductors, also a big to start the year, 5%. This pullback, I guess, has run its course over the past several weeks. It pulled off of these all-time highs here around 105, got all the way down to 96, moved sideways for a few weeks, and now it's lifting back towards these prior highs. I'd be paying attention to see how it acts around 105 or so. That would be the next target if you're involved in this. But semiconductors off to a nice start for the new year. And basically hand in hand with that is technology, XLK, which again continues to really just accelerate higher here to the upside. So those are pretty much the standout sectors I'd be paying attention to. XLF, I think, is at an interesting spot. It's trying to lift higher here. It's not the most convincing looking Thursday and Friday set of sessions, but it is trying to hold above this area here and potentially looking to resolve this range higher. It is a new weekly closing high here. You can see for 4 weeks we went really tight, gave no pullback whatsoever from this big opening week of December, this range expansion here all the way up to $28. Nothing given back through price, all through time, and now we're trying to lift higher again. So it may not be the most convincing daily close here, but again, this is a space where I would not want to be trying to short this. If we saw some type of sharp reversal Monday, that would be actionable to me. If we came crashing back down through this, back into this range and then taking out these lows, that is definitely an actionable price action signal that I'd be paying attention to, but I would not consider that the high probability at this point. I would want to be sticking with this trend, and like we do have exposure in this market, just continuing to raise up stops and looking to see if this breakout can continue higher for a second leg. So that's financials, kind of waiting and seeing there, and not as overbought, so you may find some opportunity there if that does continue to leg higher. And then XLU, just this is the kind of the left alone sectors of the market that really aren't participating at all. They're the defensive areas. They're also tied to rates. And you can see XLU, we've seen some good distribution coming in here. Take a look at the volume on these sell days. This has come very fast off of the highs here from 57. It's doing it in pretty sloppy fashion. So XLU is not that interesting to me whatsoever. If you're tactical, there's probably dip buying opportunities here if you are interested in dip buying on the utility sector. But it is stretched, so again, a snapback, 1-2 day snapback totally makes sense. It's at a general area of support here, so I do understand that this is a interesting spot to pay attention to it. But overall, on the weekly here for the longer term participants, I don't see too much. There's just too many other sectors that are working right now that I'd rather be focused on. So that's sort of my thoughts there on XLU. And we'll tie IYR in it. It's basically the same thing. The weekly chart shows the nice picture here. It's at a very vulnerable spot. It's been crawling, grinding higher throughout 2017. You can see it's trying to break through this lower trend line right now. And that would be a pretty ugly development here for IYR if it continues to hold underneath this 79.50 area, $80. I think that would be that would be a bit troubling here for the real estate index. So that's what I have for today. Hopefully you guys had a great first week of 2018. Happy New Year. And I think that's it. So thanks so much for watching. If you like the videos, do subscribe to our channel. Otherwise, I will talk to you on Tuesday.